Hi everyone, good evening to all of you guys. So, thank you for being with us here today. And I hope na you guys are all safe out there. Tapos, sana maybe you guys are on the way home listening or maybe you are at home chilling lang. So, I would like to welcome everyone and thank everyone for being here. Also, thank Lemonade or Rain for making this event happen. So, yep. I would like to introduce also Jared. So Jared's our research analyst. He will be talking with me today about what REITs are and how we can make money off of them. So Jared, please
Mm.
say hi to our audience.
Hi guys. So yeah, very excited for today's talk.
All right. So okay, next slide, please. All right. So for today, we are here to talk about real estate investment trusts or REITs for short. Because the problem that I see right now is that you know how older people or kunyari mom ko or grandparents ko, they always tell me to buy real estate for investments eh. Tapos ako naman, 1,000 lang naman ang GCash ko or 1,000 lang naman ang wallet ko. So, I'm going to ask them, how do I do that, right? I don't have enough money. Pero kidding aside, actually, hindi naman 1,000 yung laman ng wallet ko. I have savings because we promote financial literacy here. So, joke lang yun. Pero my point is, with REITs kasi, you can invest with as little as 1,000 to 5,000 pesos and by having exposure to real estate assets or properties. So, okay, next slide, please. So, what are the REITs, okay? So, REITs are companies that own, operate, and finance income-generating assets. So, in simple words, it's a publicly listed company that owns real estate and then it rents out to make money. So, invest in real estate with as little as 1,000 to 5,000 pesos, depending on which REIT you are going to pick. So, next slide, please. Oh, sorry, can you go back to the last slide? So an example of this are office buildings, shopping malls, hotel and resorts, and solar farms. So these are the assets that a REIT can own and then rent it out to other people. Next slide, please. So how do they work? So REITs are publicly listed on the PSE, allowing investors to buy shares and own a fraction of the REIT's real estate portfolio. So basically, it's a company who rents out its real estate assets, right? So it makes rental money out of that. And so when you buy into a REIT, you become a partial owner of the company. And so when the company makes money, it shares its profits to you. So sobrang gandang idea niya, right? Imagine na you just have as little as 1,000 to 5,000 pesos and you share the same profits. Kung magkano yung kinita ni Ayala sa A-REIT, you also make that much amount in terms of percentage. And okay, so next slide, please. All right, so this is just a diagram that shows us, um, how REITs work or how do they raise money and then how do they pay out the dividends or share the profits. So first is they find a sponsor. So let's use an example, right? So for example, they find Ayala. So si Ayala, he's going to invest money. Sorry, si Ayala, he's going to invest the land into the real estate, into the REIT, and then the REIT will give Ayala naman the assets or the shares, okay, or the ownership of the REIT. And then the investors will put in money sa REITs natin, mag-i-invest sila, and then they'll get the shares, and then they'll get the profit whenever the REITs make money. Next slide, please. All right, so this is the law that's governing all REITs. So this is the REIT Act of 2009, RA number 98576. So the main purpose is to allow small and large investors to participate in the ownership of real estate. So basically, ito yung gist or idea of REIT Act of 2009. And the main point here is that at least 75% of the deposited property of the REIT shall be invested in or consists of income real generating asset. So basically, 75% ng assets dapat nag-generate ng income. Okay? Bawal nilang i-hold lang siya. And then REITs are required to distribute at least 90% of distributable income as dividends. So whatever money that they make, they should, for the year or net income, they should be able to distribute 90% of that. That's the law. So hindi pwede na they decide na, oh, I want to use 30% of the profits and grow the company even more. So bawal yun. So that's the point. Okay. All right. But the question lang is, how come that the REIT Act of 2000, the REIT Act was made in 2009, pero our first REITs came into life around 2020 pa. So, di ba there's a gap of 11 years? And that's because of tax schemes and regulations there. And it was only solved when train law happened. And train law happened around 2018. So after 2018, around 2020, that's the only time that they were able to implement the REITs. Next slide, please. So let's move on to how do REITs grow. So next slide. So there are two ways that a REIT can grow. The first one is organic growth. So for the first one, it refers to the growth of a REIT's revenue and profitability through internal improvements and enhancements to existing properties. So it could be rent escalation. They just increase the prices for the rent. It could be improving occupancy rates. So they just make sure now a lot more people are renting sa real estate property nila. And then the next one is property enhancements and developments, operational efficiency, and consistent lease renewals. So consistent lease renewals is important because you don't want to be finding a next buyer or a next person who's going to rent it. Kasi you're going to incur fees ganyan along the way if you keep on finding for the next tenant. So next slide, please. And then the next one is inorganic growth. So actually, this is a better way for us as investors because we can earn more dividends if they grow it through inorganic growth. So property acquisitions is the most practiced way. So that's the first example. So it can be through cash acquisition or they pay with cash or property for share swap agreements, which is they pay using shares naman. So let's use an example lang. For example, pag sinabi natin cash acquisition, it is when a REIT buys a land and pays for it with 100 million pesos cash. Pero when we say property for share swap naman, it's when a REIT buys real estate or land and gives the seller a REIT shares naman, not cash, a REIT shares worth 100 million pesos. So on to the next slide, please. So on to the next slide, I have an example of an inorganic growth through property acquisition. So I'm using a REIT as an example. And as you can see, with every acquisition that a REIT makes, it's making a REIT's dividend per share increases also. So hindi siya non-dilutive siya. Ibig sabihin, hindi naapektuhan yung nare-receive na dividends ng mga investors natin. Kasi normally, if a company does property for share swap, dumadami kasing shares na issue. So lumiliit yung dividends. Pero for a REIT, if you can see, for the first quarter of 2020 up until fourth quarter of 2024, the dividends that a REIT gives to the shareholders, it's consistent, safe, and it's growing. So next slide, please. So now let's discuss on why REITs could be better than traditional real estate investments or why it could be worse. Next slide, please. So in this slide, it's comparing all the fees. So for example, for real estate, no? So for example, for real estate, whether you are a buyer and most definitely if you are a seller, you're paying exorbitant fees. Okay, you're paying sobrang taas na fees. And then as an owner also, if you're renting it out, you're paying real estate property tax, which is 1 to 2%, and your income tax or rental income, natatax ka rin ng 35% for individuals. And if you compare those fees into REITs, pag bumili ka ng REITs, sobrang baba lang ng fees and taxes mo, which is similar to when you buy and sell stocks of tradable stocks here in the Philippine Stock Exchange lang. So as you can see, the main advantages talaga when you buy into REITs is that you pay a lot less fees as compared to kapag bumili ka ng real estate. And not only that kasi, right now kasi, if you buy into real estate, especially condominiums, they don't appreciate as much in value kasi for condominiums at least, right? And The problem is illiquid kasi pag real estate you can't easily sell it. As compared to REITs, it's very liquid. Whenever the time na you decide you want to sell it, you can sell it. And mas ano siya, you can participate with as little money as possible, right? You don't have to shell out 1 million, 2 million pesos, right? And yung pag real estate kasi, yung yields that you get, it's much lower already. So for example, right now, if you're going to rent out a property, the yield could be like 2% or 3% or 4% na lang. As you compare it to REITs, the REITs could be like 5, 6, 7, 8%. So next slide, please. And then here, this is just a comparison naman of the real estate and the REITs. First of all, when it comes to the difference is you get rental income from your real estate, right? Pero syempre, it requires a lot more capital. And then for REITs, you get dividends. And then the next one is liquidity. So for liquidity, it's very difficult to buy and sell real estate properties. You pay a lot of fees, you pay a lot of taxes, etc., etc. It's super hard to find a buyer. It takes a lot of time, right? Pero for REITs, it's highly liquid. Ibig sabihin, it's easy to buy and sell. Whenever I decide to buy or sell, as long as the stock market is open, I could do that, or I could execute that. As for capital requirements, it's very high again to own real estate properties, especially here in Manila. The prices sobrang taas na, right? It can go crazy. And then, as I said, the yield, it can be very low na lang, like 2%. You could get 2%, 3%, 4% per year if you rent it out. And then for the REITs, it has very low capital requirements. Ibig sabihin lang yan na around 1,000 to 5,000, depending on what REIT you want to invest in or buy in. So 1,000 to 5,000 lang, you could get into REITs already. And then for real estate naman, another thing with real estate is that the management and maintenance fees. So you have to pay for that as well. And then control over the properties and decision-making process. Syempre, it's hard to have that. Oh, sorry, that's the advantage, the control over the properties and decision-making process. So for REITs, it's professionals manage the properties for you. So they make it so much easier for you, or then no control over the properties and decision-making process. So that's the disadvantage for REITs. Because obviously you're just a shareholder, very, very, very minor shareholder. So you don't have that much of a say na when it comes to the decision-making process. So next slide, please. So now I want to turn it over to Jared to talk about what are the important metrics. So Jared, ano ba yung hinahanap natin when we are looking for REITs? So please take it away, Jared.
Sige. Thank you, Aaron, for that. So let's move on to the important metrics in REITs. So now that you know what REITs are and their advantages versus investing in actual real estate. So let's look naman how you should be evaluating each of these REITs. So first metric, let's look at distributable income. So ito ang portion of a REIT's income available to be distributed to shareholders in the form of dividends. So when it comes to REITs, diba, like for example, if you're gonna invest in actual real estate, what you will earn is rent, diba? So in REITs naman, your rent is essentially the dividends. So that's your form of rental income. So distributable income, so this is the profit generated by a REIT, excluding non-cash expenses like fair value changes in investment properties. So what happens kasi is REIT companies report in their net income fair value changes sa properties. So for example, if you have a property na let's say it's worth 1 million pesos, tapos tumaas yung value niya to 2 million pesos. What happens is the accounting standards in the Philippines, it considers the 1 million peso appreciation in property value as part of net income. Pero if you think about it, diba? Hindi yun cash diba? If your property increases in value by 1 million pesos, hindi yun cash na income. It's just the value of your property going up, which is intangible, diba? So walang cash yun. Unless, diba, you sell the property at 2 million pesos, right? Then you can realize the gain as a cash income, diba? But for net income, diba, that's a non-cash income, right? So basically, distributable income is the income in the form of cash that can be given out to shareholders as dividends. So what's the importance of distributable income? So first is dividend guidance. So it gives us a clear picture of how income is available to be distributed to shareholders as dividends. So according to the REIT law, like what Aaron said, diba? So REITs must distribute at least 90% of their distributable income as dividends to shareholders. So kung may REIT ka na may distributable income of 1,000 pesos, di ba? It must declare at least 900 pesos worth of dividends, di ba? Kasi 90%. Then second is financial health, di ba? So it gives a clear picture of a REIT's financial health and ability to generate cash. Kasi net income, again, if you rely on net income, hindi siya clear, di ba? Kasi it's distorted kasi it allows for the fair value changes to be recognized as net income. But in reality, di ba, if your property value goes up, di ba, that's a non-cash income, di ba? So even though you incur a 1 million peso gain in your property appreciating in value, di ba, you cannot distribute it as dividends kasi there's no cash in that gain, di ba? So that's the importance of distributable income. So next. So we'll show naman an example. So here is an example of distributable income in the report of C-REIT, di ba? So here you can see na it deducts straight line rent adjustments. So this is a form of a non-cash item, right? Then if you want a stricter measure, di ba, you can also deduct depreciation because depreciation is another non-cash item, di ba? So what is depreciation, right? So if example you buy a building, di ba, over time, di ba, there's like some wear and tear, di ba? So that's what depreciation is. It deducts the value of the building as it ages, right? So that's another non-cash item. So once you deduct that, you get your adjusted funds from operations. So that's what you call AFFO. Then here, if you notice the dividends, it's exactly equal to the AFFO. So why is this so? Because C-REIT is very generous, right? So all its cash income, right, they're giving it out as dividends, 100%. So that's why their dividends is exactly equal to their AFFO, right? So yeah, here we can really see that C-REIT is very generous when it comes to dividends. So all their cash income, they're able to give it out. So there. So next slide. So next metric, let's look at GLA. So GLA stands for gross leasable area. So what is this? So this is total floor area available for rent to tenants, right? So you measure this in the form of square meters, diba? So yun. Then when you're measuring GLA, you're only looking at the leasable area. So these are the spaces that can be rented out within a property. So this can be like office spaces, right, in the office building. It can be the mall space within the mall. It can be the industrial park and then land, right? So since it's leasable area, it excludes the spaces that are unleasable, right? So what are these examples, right? So spaces where you can't really rent out to tenants, right? So let's say hallways, right? That's just where people walk, right? So can you settle the hallway? No, right? Lobbies, maintenance rooms, like, you know, yung mga rooms with like the boiler rooms, right? You cannot lease that out, right? So those are not part of the GLA. It's only the spaces that can be leased out. So mga store spaces in the malls, that's part of the GLA. So what's the importance of GLA? So the larger the GLA of a REIT, that means there's more leasable space that the REIT can rent out to, diba? So if you have more space which you can rent out to, diba, the higher the possibility that you can have more rental income, diba? Basically, kung marami kang space na pinapaupa, diba, of course, mas tataas ang renta mo, diba? And that's basically how a REIT works, right? They're basically being the traditional, diba, landlord, but investors are able to get exposure to that without paying for the whole property value, right? So that's how a REIT works. And then the great thing rin is REITs actually provide information on property or tenant diversification based on their GLA. So for example, they can actually report like maybe 50% of their GLA is office, then another 50% is malls, or let's say 50% of their GLA is occupied by BPO, tapos the other 50% is retail. So something like that. Then from that information, we can actually see how well diversified a REIT is with the properties and the tenants. So a rule of thumb is we prefer that the REIT mas diversified siya para we can mitigate the risk. So example, what's happening right now is the office space situation in the Philippines. There's an oversupply, diba? So since may oversupply, diba, you might see some office spaces na maraming vacante, right? The vacancy rates are high. So what we prefer is REITs that aren't fully exposed to office. So example, there could be REITs that have retail exposure like malls or even industrial lots for like solar projects, right? So if the REIT has more than just office and well diversified in property types, diba? Less risky, diba? Because you're avoiding the office space oversupply. So something like that. Next. So we'll give an example naman of where the GLA is reported in the reports. So here's an example of MREIT's report. So here you can see the total GLA of MREIT and how much of it is actually being leased per property, diba? So the GLA is broken down per property. So the GLA, it can also be occupied or not occupied, diba? So later we'll get into that since that's related na sa occupancy rate. So next. So here's another example naman, but for a REIT, where here in the report, you can see the diversification of GLA by property type. So based on their fiscal year 2023, you can see na 63% of their GLA is office, while 24% is retail. So here you can see that a REIT strategy is very good because they're diversifying away from office kasi nga oversupply, diba? So here you can see that the diversification strategy of a REIT is really working, right? So next. So let's look at the next metric. So like I was alluding to a while ago. So here is occupancy rate. So what is occupancy rate? It's simply the percentage of a property's GLA that is currently being rented out. So it's very easy to compute this. So example, you have 100 square meters of space. Then let's say 90 square meters may umuupa, right? So 90 out of the 100 is being rented out. So that means your occupancy rate is 90%. Why? Because you got the 90% of square meters that is being rented out divided by the 100 square meters of total space, right? So that is your occupancy rate. So if 100% ang occupancy rate mo, that's good. That means it's a full house, right? So your property is fully occupied by tenants, right? There is zero vacancies, right? Then if your occupancy rate naman is zero, that means no one's there, right? No one is occupying your real estate. So that means you have zero rental income because no one is occupying it, right? So the rule of thumb is the higher your occupancy rate is, generally, mas mataas ang rental income ng REIT. Kasi mas maraming tao yung umuupa sa property mo. And this is very important for dividends kasi if mataas ang occupancy rate mo, that means the REIT has higher earning potential, diba, to make money. So there. And then a high occupancy rate also suggests strong demand to rent out in the property, right? So a high occupancy rate can also mean maybe maganda yung location ng property mo, right? It's located maybe in a central business district like BGC or Makati, right? So that's why a lot of people, they really occupy that space, right? Because like example, if you're looking for work, right, it's either BGC or Makati, diba? So that's a common notion, right? Because those are prime locations kasi they're located in a central business district. So there. So if I were you, right, if you were to choose to buy a REIT, for me, I would go for the one with the high occupancy rate, because if you see the occupancy rate declining, right, that means there's a problem with the REIT because they're not able to retain or attract new tenants to occupy their space. So next. So let's go back to MREIT. So here you can see the occupancy rate, which is simply the leased area divided by the total GLA, right? So here it's broken down by property. So you can see this in most of the REITs. They actually provide this information in their fund manager's report. So all REITs are required to disclose that in PSE Edge, right? So there. Next. So the next metric we have is WALE, or weighted average lease expiry. So this one naman is the average time left until the leases of property expire. So when you rent out, of course, may contract yan, di ba? So there's a duration or term for the rent, right? So example, you can rent out the property for, let's say, 5 years. Tapos after 5 years, tapos na yung contract, right? So you can either renew the lease for another 5 years or hanap ka ng another building or another place to rent out. So that's the same case for a REIT, right? So WALE naman is the overall time left before the term of the REIT's tenants expire. So what happens kasi is a REIT has a lot of properties, right? So WALE is basically parang the summary of how long in general, overall in the REIT, it would take that so that all the leases of the REIT will expire. So, but generally, each property, right, each tenant, right, they have their own contract, right? But WALE, it simply summarizes it all for that property. So, WALE naman is very important kasi as a landlord, di ba? Basta may tenant ka, you're more of sitting pretty na lang, right? You're just there collecting rent from your tenant. So, stable and predictable na ang future rental income mo, because generally, di ba, you're just applying the same rent, then maybe every year you're increasing your rent by like certain percentage, right? Maybe 5%, di ba? So, generally, as long as occupied yun spaces mo, right? Your rental income, it's very predictable already. So if mataas ang WALE mo, di ka pressured to find new tenants to replace the leases, right? Right? Because you have enough time, right? So if, example, your WALE is 5 years, that means you have 5 years left to convince your existing tenants na mag-renew ng lease with you. Or if ever they don't decide to renew, you have 5 years left to find new tenants to replace those leases, right? So basically, pag mataas in WALE, it means the risk of higher vacancies and income volatility is lower kasi you have enough time to convince your existing tenants to renew their lease or find new tenants para i-replace yung mga expiring leases na yun, right? Then, if shorter naman ang WALE mo, right, it suggests na leases are nearing expiration, right? So that could actually lead to higher tenant turnover and potential vacancies, right? So it's riskier for investors. So next slide. So here naman is an example of the WALE in a REIT. So here you can see there are two WALEs, right? One is for offices, then one is for overall. So for offices, it has a WALE of 3.8 years. So again, this means that it has 3.8 years of buffer to find new office tenants or convince existing office tenants to renew their lease. Now, if you notice naman, yung overall wale niya is 10.1 years. So why is it 10.1 years if office naman is 3.8 years? So then again, I said a while ago that it's per property type, right? Per property, right? So there's a wale for office, there's a wale for another type of property in their property mix. So here you have to actually look at a REIT's portfolio mix. So here, office is not the only property it offers, right? It has industrial lots, retail, and hotel. So these properties, retail, industrial lots, and hotels, mas matagal yung lease terms nila. So office, it can be maybe 1 to 5 years. Kapag malls, industrial lots, and hotel, generally longer, maybe 5 to 10, maybe 10 to 20. So that's why. So that's why if you take those into consideration, mas mataas talaga ang wale ng e-REIT. So especially the industrial lot, because most industrial lots, more than 10 years, 10 to 20 years usually, yung lease term na yun. So there, that's why e-REIT's overall wale is 10.1 years, while office is only 3.8. So next. So finally, this is the last metric. So rent escalation. So ito ang contractual or periodic increase in rental rates over the lease term. So basically, ito ang tubo of sa rent each year, right? So example, if your rent this year is maybe 100 pesos, baka next year 105 na yan, right? So generally, each year the rent becomes more expensive, and that's how REITs remain profitable, right? So this is also important because it allows rent to keep up with inflation, right? So if maybe inflation is going up by, let's say, 3% each year, diba? Dapat yung rent escalation mas mataas, diba? So make it maybe 5, diba? Para it can keep up with inflation, right? Because if your rent escalation is lower than the inflation rate, diba? You're actually not creating value for yourself and your investors, right? Because the rental rate, hindi siya sumasabay sa inflation. So that's one rule of thumb you can look at. If you're gonna invest in a REIT, dapat yung rent escalation niya, it should at least keep up with inflation. Then why is rent escalation important? It provides predictable increase in rental income over time. So ito yung tinatawag na organic growth ng REITs, like what Aaron was saying a while ago. So even if you do not infuse more properties into the REIT, and let's say stable lang yung occupancy rate mo, di ba? Pwede pa rin tumaas yung rental income ng REIT and increase your dividends. Why? Because each year tumataas yung rental rate because of the rent escalation. So all else equal, let's say you have stable occupancy rate, you don't infuse more properties, you're still going to be making more rental income each year kasi tumataas yung rent because of the rental escalation rate. So next. So for example, here naman is PhilREIT. So if you read up their reports, they have an average annual rent escalation of 5%. So on average, PhilREIT's rent increases by 5%. So why does it say average contract rental escalation rate? Because PhilREIT has multiple properties, right? So hindi lang siya isa. So basically, what this is saying is that generally, overall, in the rental income for all of PhilREIT's properties, on average, tumataas yung renta nila by 5%. So next. So now that we know the metrics naman of how to analyze REITs, let's actually look at who the REITs are in the Philippine market. So there's actually 8 Philippine REITs, and I think in the future, this will increase because I think there's a lot of companies that declared na they plan to list their REIT in the future. So I think one is like, from what I've read, there's Alternergy, right? The power company. There's SM Prime, but they keep delaying it, right? Also, Cebu Land Masters, I think by 2026 now, that's their plan. and also Double Dragon Central Hub. So that will be the logistic REIT of Double Dragon. So those so far are the ones I've been hearing. But I think generally, overall, there will keep on being more REITs in the future. So let's look at the 8 listed REITs right now. So first is A-REIT. So A-REIT was the country's first REIT, and to be honest, for me, it's the best REIT in the country right now. So its sponsor is Ayala Land. So Ayala Land is run by the Ayalas, right? So it has a portfolio of 24 properties with a total valuation of 117.6 billion pesos. So this is actually not the property valuation it had when it IPO'd. So this is actually 3.92 times its valuation back when it IPO'd, right? So here we can see that in just the span of, I think, 4 years, yeah, since IPO, they've almost quadrupled their property portfolio, right? So that's incredible. So that was driven by property infusions through property for share swaps, and I think there's one cash acquisition, right? So its latest notable infusion is the industrial lot in Palawig, Zambales. So that's actually owned by ASEN. So ASEN is the tenant for this lot, right? So that's Ayala's power generation company, right? So it currently has a GLA of 3.82 million square meters, but I think 2.7 million square meters is because of the industrial lot. Because, diba, when you're building industrial lots, you need flat land, right? Unlike office, diba, patas yun, diba? So you don't need much space, right? Kasi it's not a flat land, right? Unlike offices, diba, you can build up because it's a building. Unlike industrial lots, flat land yan eh, diba? So that's why mas malaki. It takes up more GLA. So here it has A-REIT has a 96% blended occupancy rate. So when I say blended, it means the average occupancy rate of all its properties, because each property has its own occupancy rate. But if you take into account the whole GLA, the total GLA, it has a 96% blended occupancy rate. Then it also has a blended WALE of 21 years. So 21 years is because of the Palawig lot. But if you exclude the Palawig lot, it's closer to around maybe 4 years of WALE for the offices, right? So there. So it has a rent escalation rate of 2.5 to 5% per annum. Then here you can see the GLA by sector. So clearly it has diversified away from office space. So now it has a mix of retail and hotel properties. And 70.9% is now industrial lot because of that 2.7 million square meter Palawig lot. So there. Next slide. So next is RCR, or Robinson's Land Commercial REIT. So its sponsor naman is Robinson's Land, which is run by the Gokong Wei family. So its portfolio has 29 properties. All its buildings are PESDA accredited, most of which are grade A rated. And some have EDGE and LEED certifications, which means that the buildings operate under sustainable practices and are resource efficient. So it has a GLA of 827.8 thousand square meters, an occupancy rate, this is the blended occupancy rate of 96% also, similar to A-REIT, and a WALE of 2.7 years. So mas mababa siya than A-REIT. Then, because it doesn't have an industrial lot, so it's a mix of offices and malls, right? Then its rent escalation is 3 to 5%. So there. Then GLA by sector, RCR shows it now has a third of its GLA for retail. So this is the Robinsons malls. So its latest infusion, it infused a lot of malls, right? So that's why it's now accounting for a third of their GLA. And 2/3 is still office, right? Like, I think most streets, they're still mostly office, but slowly but surely they're diversifying away na. So next slide. So next we have REIT, whose sponsor is MegaWorld, run by the Tan family. So it has 18 properties, all of which are still office buildings, right? So this one, REIT has been a bit slow to diversify away from offices. Pero they already give guidance na they plan to diversify away and infuse their mall assets retail by next year. So that was actually the plan by the end of this year, but by the looks of it, parang it's gonna get pushed through to maybe early next year. So we'll have to wait for that. So it actually has a plan to infuse 6 more office buildings by the end of the year. So those 6 office buildings are worth 13.15 billion. So that would increase its GLA by 157,000 square meters, which would turn its GLA from the current 325.4 square meters, 1,000 square meters to 482,000 square meters, right? Then, and by 2027 to 2030, REIT is actually targeting to have 1 million square meters of GLA. So we'll see if that really happens, right? So, because right now it's only half of the 1 million target. So REIT has an occupancy rate of 93% with a WALE of 2.8 years. So if you notice its occupancy rate, it's lower than RCRs and A-REITs because it's all office. And since we have an office oversupply, that's why it's a little lower than 100%, right? And lower than RCR and A-REIT, which has a better portfolio mix, right? So looking at the tenant mix naman, so it's highly concentrated sa BPOs and some traditional. So there, next. Next, we have PhilREIT or the PhilInvest REIT. So its sponsor is PhilInvest Land, which is run by the Gotianan family. And not just PhilInvest Land, but its sponsor is also FDC, which is PhilInvest Development Corporation. So their portfolio now has 18 properties, 17 of which are still office buildings, and 1 Boracay property. So they are also the first sustainability themed REIT with grade A properties. So its properties are all energized by renewable energy. Ang downside naman ng PhilREIT, in my opinion, is all its properties are still office and they're all concentrated in Alabang. So 17 of those office buildings, they're still in Alabang. So overall, PhilREIT has 330.4 thousand square meters of GLA with an occupancy rate of 83%, but with a higher WALE of 7.43 years. Then it has a rent escalation rate of 5%. So here, similar to REIT, its tenant base is still all office and mostly comprises of BPO. And then 10.7% comes from hotel. So next. Next, we have DDMPR or Double Dragon Meridian Park REIT. So its sponsor is Double Dragon, run by Mr. Injapsia. So DDMPR comprises of 3 commercial properties and 6 office towers. So it has a GLA of 172.3 thousand square meters and an occupancy rate of 76% and a WALE of 1.9 years. Its rent escalation is 5% per annum. So DDMPR, mostly office REIT pa rin siya with 92% of its GLA still coming from office, then 8% comes from retail. So next. Next, we have Vista REIT. So its sponsor is Vista Land, right? Run by the Villar family. So this is actually the country's first retail-focused REIT. So since its IPO, its portfolio is really primarily composed of malls. So it has 12 properties, so 10 of which are community malls, tapos 2 of them are offices. So it has a GLA of 256.4 thousand square meters and an occupancy rate of 97%. So if you notice the occupancy rates for retail properties, they're a lot higher than offices, right? Then it has a WALE of 4.1 years, then a rent escalation rate of 5 to 10%. So here you can see that 85.8% of its GLA is coming from retail, which is its malls, Vista malls, right? Then 14.2% is office. Then next, we have C-REIT. So this is Citicorp Energy REIT. So it's actually the country's first energy REIT. So this is run by Oliver Tan and Edgar Saavedra, who is also the owner of Lemoneyd. So its sponsor is CREC, which is also listed, which is the Citicorp Renewable Energy Corp. So the good thing about this is its tenant is its sponsor itself, right? So that is why they have an occupancy rate of 100%. And CREC has a total installed capacity of 145 megawatts. So basically, CREIT owns the land which CREC develops its renewable energy farms in. So here's some information. So CREIT has 14 leasable properties spread out in all major provinces in the country. So it has a GLA of 7.1 million square meters, a WALE of 20.7 years, and a rent escalation rate of 2 to 3% per annum. And lastly, we have P-REIT. So P-REIT is the second energy REIT in the company. So it's also run by the Villar family. So P-REIT actually has two sponsors. So one is the SI Power Corporation and the other one is the Camotes Island Power Generation Corp. So they're basically SIPCOR and CAMPCOR. So similar to C-REIT, P-REIT's tenants are its sponsors itself, right? And it has a total GLA of 30.67 thousand square meters, a WALE of 8.3 years, and a rent escalation rate of 3% per annum. So next. So basically, here's a summary of all the REITs based on their latest quarterly updates. So you can take a screenshot of this if you like. But here in Dragonfly, we generally like the top 3 REITs, which are A-REIT, C-REIT, and RCR, because they have the best asset quality and it really shows in their dividends since those are the ones with really increasing dividend per share. Next slide. So here is the year-to-date returns of all the REITs with their trailing 12-month dividend yield. So basically here we can see that A-REIT is still the best performing REIT since its IPO. So next, I'll hand you over to Aaron.
All right. So I just want to discuss the question that I usually get from people or my friends. No. So the question that they usually have is, are REITs suitable for trading? So number one, for scalping, obviously no. When we say scalping, it's when you try to buy and sell a stock within 5 minutes, 30 minutes, or a day, or even 2 days. Ganyan. So definitely no for scalping. For swing trading, it could be very difficult. Pag sinabi nating swing trading is when you buy and sell into a stock for a few days or a few weeks only. So why did I say na mahirap mag-swing trade? Alright, so why did I say na mahirap mag-swing trade? And the reason because is medyo mataas kasi yung transaction fees natin dito sa Philippines compared sa US, no? So it's around 1%. So imagine na lang if you buy into a stock and then gumalaw siya ng usually galaw niya 2%, 1%, ganyan lang. And then you have to pay for fees pa. So it's not worth it eh. So that's why you usually use REITs or invest into REITs for dividend investing. So it's much more appropriate to collect dividends for REITs because the prices usually moves very slow as compared to our local stocks like blue chip stocks, or no, not even blue chip stocks, maybe medium cap stocks, right? Mga medium sized companies natin. So okay, so next slide please. So I would like to discuss the tools that are useful for REIT investing. So actually here at Dragonfly, we have what we call dividend screener. wherein you can see financial ratios here, you can see different REITs here for you to scan and choose ano ba yung mga magandang REITs na pag-iinvestan natin ngayon. And then the next one is market calendar also, wherein it's important to stay updated kung kailan ba ibibigay yung mga dividends natin. So you'd see here your X date, your payment date, etc. So I'll explain that in a bit. So what I would like to do is I would like to do a quick mobile demo. Kasi syempre, I don't want you guys to be hearing this lang eh. I want you guys to be seeing this also para you're guided when you do it yourselves na. All right, so now it's connected, okay? So I'll go to the home screen. So this is the home screen, right? And then you click more here. After you click more, you go to dividend screener, sorry. Here you go to dividend screener. It's at the bottom left corner. So after you click dividend screener, you'd see all the stocks here, right? So what you would like to do is on the upper left, you go to the search by stock name, you click that, and then you type in REITs or REIT. And then when you have your REITs already, okay, click return, and then when you have all your REITs already, you'd see here all your REITs. But what I would like to do is I would like to filter it out. I would like to click stock on the upper left, just so that it's filtered out in a way that it's listed alphabetical order. Because I would like to see a REIT first eh, kasi favorite ko rin yan. Just like Jared, favorite ko rin yan. So here I'd see a REIT first. So I'd see all the REITs in alphabetical order. And then here on the right, you'd see also the price next beside to the stock. So for example, a REIT is priced 39 pesos, C REIT 3 pesos, so on and so forth. And then you'd see net change, which is basically the percentage that it moved for today. So for example, for a REIT, it went down negative 1.5% today. C REIT went down negative 1%. DDMPR moved positive 2%. So as you can see, the movement is just 0.5, 1%, 2% maximum maybe. So it's very small movements per day lang. And then this is the most important part. So you'd see here is the dividend yield. So basically the dividend yield is how much profit you'll get per year, right? So for example, when they make money and then they're going to distribute it, this is the dividend yield. So when I say you have a dividend yield of 5.74%, if you invest 100 pesos, you'd get 5.74 pesos. Okay. And then the next part, okay, this part, I'm just scanning para I highlight the most important parts. Okay, that's useful for you guys to choose for dividends. By the way, I forgot to mention, but for the dividend yield, what you would like to pick is nothing too high, nothing too exorbitant, pero nothing too small also. So as you see, if I filter it out through dividend yield, I'd see that I have a 5.74%. Okay, nothing too low, meaning maybe like less than 3%. Because syempre, that's too low of a yield na mababa na yung kita mo. And nothing too high also, maybe like let's say above 9 or 10%. Because by that time, usually it signals that the dividends are declining. The growth of the dividends are declining. That's why the dividend yield is so high. So we want to stay out of super high dividend yield also. And then just scroll here and show financial metrics. You can click show financial metrics para it shows you other important metrics. Okay, so here you could see na upcoming dividends, right? So whenever they have upcoming dividends, it's going to show here. And then it's also going to show the X date. The X date is basically you should be holding on to a stock or a REIT one day before the X date to be qualified for its dividends. So let's use an example. So for example, a REIT is going to give dividends on January 5. So basically you have to be holding onto a REIT by January 4, by the end of the day of January 4, para you are eligible to receive a REIT dividends. Payment date is when you get those dividends. All right. So, and then, for example, what we could do here also is that we could use the calculator. The calculator, you can see it in the upper right corner here. And then what this does is it's called a price finder. So basically, you'd know at what price or at malalaman mo ano yung buy below price mo. So for example lang, I'm looking at a REIT for example, and I don't know ano ba yung maximum price ko that I'm willing to spend it just so that nasulit yung dividends na nakukuha ko. So I'll use the price finder. So for annual dividend, I'll go back to the screener and then I'll look for the annual dividend yield. So here, so the current year dividend is 2.25. So I'll go back to the price finder. I'll key in 2.25. The required return is usually 11%. So basically, this is like a discounting feature or discounting factor lang. Meaning to say na the money you have today kasi it's not the same, it's not worth the same like 10 years from now, 11 years from now because there's inflation eh. And there's opportunity cost. Like you could have invested that money elsewhere. So this is like a parang premium or a factor lang that you put here. And then the dividend growth naman, so far kasi, the REITs, they're not here for so long pa. So that's why they're not available on the screener yet. Pero usually it's around 5%, especially for AV. So the dividends are growing at 5%. And then you press calculate. There. And then so the maximum price that you can spend to buy a REIT right now is around 37.5 pesos para sulit yung dividends na nakukuha mo. So you're getting enough yield. So that's it. So the last feature that I would like to highlight lang is yung calendar natin or yung the dividend calendar. So you go back to the home screen, you click more, and then you click dividends here. And then you see here all the upcoming dividends that are going to, all the upcoming REITs or stocks that are going to pay out their dividends. So actually, the first one, the upcoming one is RCR, right? So this is a REIT. And you'd see here the payment date when you're going to get paid for the dividends, the dividend rate, kung magkano yung kikitain mo per share, and then the X date, kung kailan kailangan hawak mo yung stock or yung REIT to be qualified for it. So one day before the X date, dapat hawak mo siya. So that's it for our mobile demo. So next slide, please. All right. So what I would like to point out lang is that we would like to make investing inclusive for everyone. So that's why we made it a point now you can invest with as little as 1,000 pesos here at Dragonfly. So next slide, please. And then what we also like to do is that we would like to promote or give a promotion of you can earn 1,500 peso referral fee if you refer someone. And actually, you guys can use Lemoneyd's referral code so that you guys can earn your 1,000 up to 1,500 pesos. So next slide, please. Okay, so also you can transfer your stocks from your other brokers to Dragonfly with just 150 pesos per stock. Next slide. So here, so you can use Lemoneyd's referral code, spelled as LEMONEYD, and then you can earn up to 1,500 peso cash if you buy deposit and invest into stocks. And then you'd also get a 50 peso cashback if you buy and invest with minimum of 5,000 pesos into a single stock or a single fund, and a free prime upgrade also. So now what I would like to do is move on to our Q&A portion. So actually, I would like to call on our very own CEO, Sir John. So Sir John, say hi to our audience.
Hi everyone.
All right.
Thanks for staying on. By the way, before we start the Q&A, I'd like to highlight one thing. I can't overemphasize the democratization ability of REITs. Because if you think about it, passive income by way of real estate investing used to be the domain of the wealthy. Why? Because if you look across the properties here in the NCR region, right, in Metro Manila, you're now looking at 100,000, 150,000, even more per square meter. So if you're looking to plunk down an investment in a hard asset such as real estate, it's going to take significant amount of capital. Then renting it out is even actually not that easy. Like what what Aaron was pointing out earlier, if you were to buy a condominium, for example, in BGC or in Makati, usually because of the value of the property, the rental yield is now down to around 2 to 3%. But as you saw with the REITs like A-REIT, which is around 5.7%, and RCR around 6.6%, the yields of the REITs are actually very, very competitive relative to the rental yield you would have gotten if you were to invest in a hard asset. That's it from me.
All right. Thank you for those insights, Sir John.
Yeah.
So now I would also like to introduce and invite to the floor the founder of the community, obviously. So Rain of Lemonade. So Rain, say hi to our audience, man.
Hello, everyone. Thank you for joining our webinar,
All right.
especially
So
to
we're
those.
currently having a bit of technical difficulty. So uh, Gerald, what do you think of the current, and Sir John, what do you think of the current REIT market right now? Like, is it a good time to invest kaya into them?
Yeah. So actually, if you look at the market right now, yun REITs, parang they're very resilient, even though the market has been dropping a lot. Parang REITs generally very stable siya. So I think REITs have reached a point na parang if it drops, parang there's really people who buy the dip talaga because when it drops talaga, mataas na yung yield eh. So that's why sinasalo na siya, di ba?
Yep. Actually, something I'd like to point out is as a Dragonfly customer, you can actually access the investing club. So in the investing club, we actually manage a real money model portfolio to teach you how to create a passive income strategy. And in that portfolio, we actually invested in 3 REITs. So we started the investing club around November of 2023. So we were able to purchase these REITs at way lower prices. So going back to Aaron's question, even though post the Trump election, the yields, even though the yields, meaning the 10-year US yields have started rising, we are still in a rate cutting cycle, and traditionally it's REITs and dividend growth stocks that benefit during the rate cutting cycle.
Okay. Actually, ako naman, Sir John and Gerald, I think na whenever REITs go down, as long as they have the same rental income, right? It's just a buy on dip opportunity, right?
Yes.
Yeah.
Well, obviously, like what we've all been talking about, we want to invest in REITs that have quality assets, right? So just think about this, like, think about whenever you're investing in a REIT, you're actually partaking from dividends that arise from rental income from the likes of Glorieta, Greenbelt, and the Ayala hotels and their offices. So it's really the quality of the property is really prime. Think about, let's say, if you were to invest in a property on your own, can you actually secure such a high quality property, right? Those are the advantages of REITs over, let's say, an individual investor.
All right. Actually, I asked Jared already, or like Jared told the audience already what his favorite REIT is. Now, what I would like to do is ask Sir John naman. Sir John, what's your favorite REIT right now?
Yeah, actually, A-REIT was the first stock we bought when we started the investing club in November of 2023. So we were able to buy it at 29 pesos. At that point in time, the dividend yield was actually above 7%. So yeah, similarly, A-REIT is my personal favorite. Jared alluded to SM potentially listing in the not too distant future. That is something to take note of, because that REIT I heard will focus mainly on their malls, the retail spaces. So as Aaron correctly pointed out earlier, we prefer REITs that diversify away from office properties.
All right. Thank you for that, Sir John. All right. So actually, I've been thinking lang, no? Like, for example, there's an individual and then he's trying to build up his portfolio. Like, how much of an allocation do you think sa portfolio niya should he or she allocate sa REITs? So what's the investment mix kaya? Or like, what's a good investment mix?
Okay, so for me, REITs, they're still they're still focused on one sector, which is property. So for me, you shouldn't really go too heavy on REITs. Like don't go 100% REIT portfolio, right? Because you're over diversified to the property sector. So for me, I would put maybe a cap of 25% of my portfolio in REITs. Yeah.
Yeah, pretty much the same for me. As a matter of fact, the REIT Association of America, their recommendation is between 20 to 30%.
All right. Thanks for that, Sir John and Jared. So yeah, so let's wait for a bit more. Um,
Hi, Aaron.
Rain, can you speak
Yeah,
already?
sorry. Can you hear me now? Sorry.
All right. Yeah, we can hear you. So it's a bit low lang yung volume.
Okay, sorry. Yeah, hello everyone. Thank you for joining our
All
webinar,
right.
especially
Okay. Pero right now, kasi Sir John, diba, I've asked you what your favorite REIT is Jared that asked you. Pero ano ba yung parang REITs naman na we're not we don't like them so much because hindi ganun ka ganda yung property assets nila, yung quality, for example. Okay, I think Rain's audio is okay na. Sir Rain, can you try speaking?
yes, hello. Can you hear me now?
Yes, loud and clear.
Okay, thank you. Yeah, thank you everyone for joining our webinar, especially those who came from our Lemonade community. Yes, okay, no? Narinig ako, sorry.
Yep.
Okay, yeah. Especially those who came from our community on Reddit, Digital Banks PH, and our community on Facebook, the Lemonade Facebook group. And also thank you for conducting this webinar, Aaron and Jared, and also for Sir John for allowing us again to educate our community on investing topics.
Yes. Thank you so much for that, Sir Rain. So, all right. So, okay, let's proceed, no? So, let's go to the Q&A portion. So, maybe, Rain, you can help us with the Q&A portion. So, what we'll do is, Rain reads the question, and then Sir John, Jared, or I can answer that question.
Yes. Actually, I have some questions here that were asked in our community. Maybe we can start from these questions first.
Yeah, of course.
Yeah, okay. So, first question is it okay to have a portfolio na REITs lang ang laman?
Is it okay na may portfolio ka and then REITs lang yung laman?
Yes,
So-
yes.
Okay, I'll start. So, like what we said a while ago, so REITs are still focused on one sector, which is property. So, if you're gonna put all your capital into REITs only, that means you're over concentrated in the property market. So, if something bad happens to the real estate market, right, you're gonna suffer a lot. So you're not well diversified in that sense, right? So like what I said earlier, I would put a cap at 25% of my portfolio allocated to REITs and property in general. So there.
Yeah, I agree with Jared. The rule of thumb is always to diversify within and across asset classes. So within let's say the equity asset class, you want to be investing in different sectors. But let's say, for example, if you have other investments, let's say you're someone that invests in, let's say, even foreign markets like the US, and then you have a local, let's say, brokerage account wherein you just want it to exclusively invest in REITs, then that's fine because in essence, it's still part of a larger portfolio, right? But yeah, it's not a great idea to really concentrate too much on one particular sector, be it REITs or any other particular sector.
All right. Thank you for that, Sir John. Actually, what I would like to add lang is that what you can also do as an alternative is to go for dividend paying stocks also, right? Because it's the closest thing that you could get next to REITs. So they offer good yields also, as long as you pick the right ones. And then the only difference that they have with REITs kasi is that their earnings are not that much consistent as compared to REITs. So that's the difference. Pero it's the closest thing na in the sense na you'll get that yield also, the dividend yield. So, yep. Next
Yes.
question,
Hmm.
Sir Ray.
Yeah, agree. The next question is, are there PH REITs that have portfolio or exposure to helping counter climate change, like clean energy? So medyo environmentally siguro tong nag-ask. So yeah.
Okay, so I'll start. Yes, so we actually have energy REITs in the PSE. So one is C REIT, right? So Citicore Renewable Energy REIT. So basically it's the landlord of solar farms. So it basically industrial lot siya. Tapos yung naka-occupy are like mga solar panels, mga farms. So that's a REIT related with exposure to the energy. But essentially, the REIT is still a property company because it's basically a landlord. But the tenant is a renewable energy company. So there.
I would like to
Okay.
add on to what Jared said lang na actually I remembered na the question a while ago asked for if you wanna put your money all into REITs, right? So as Jared mentioned, you wanna diversify, right? So one form of diversification also is that, for example, you can diversify in a way na you buy into real estate REITs like real estate, and then you put it also into REITs that are in energy naman. So that's one form or one way to do it also. Yep. Rain, could you please read the next question?
Yes. So I think this is the last now. Are REITs perform better than MP2 in regards to the dividend yield?
Okay, so with regards to MP2, so I think the latest dividend yield of Pag-ibig MP2 was around 7%. So at current prices, I think there's still some REITs that have a dividend yield of 7%, right? But when you're looking at REITs, you shouldn't really focus first on the starting dividend yield. You should focus more on the dividend growth because, example, you buy a REIT with a dividend yield right now of, let's say, 6%. If the dividends keep growing each year, maybe your purchase today, next year, your yield on cost will be 7% or even 8% na, right? So Pag-ibig MP2, generally their dividend yield flat lang yan eh. Mga 6, 7%, di ba? Unlike REITs, their dividends will grow. So if you hold it this year, maybe in the next 5 years, the dividend yield you have on cost is already 10%. So may dividend growth talaga, which is not present in Pag-ibig MP2 because MP2 more of parang time deposit lang siya na tax-free. So there.
Yeah.
Although MP2
And
is a great investment. I do believe it's a great investment. It's just pros and cons. It really depends on the risk profile of the investor. If you're more like what Jared mentioned, it's more TD more like a TD time deposit, then if that's the amount of volatility that you're willing to stomach, then that's fine. But REITs and other dividend stocks, they have the potential for capital appreciation. I think that's something that's more advantageous with like a dividend growth stock.
Yeah. So Sir John highlighted and Jared also highlighted the importance, more important, you see dividend growth, right? What I would like to add lang on top of that is that when you have a decent dividend yield and you have growing dividend growth also or growing dividends, usually you'd see your price go up also, like the price of that REIT, the price of that stock. And so that's better, right? Pero kasi if you try to chase for very high dividend yield, like let's say 11%, 12%, or 10%, what usually happens is the price is going down. The price of the REIT is going down because the dividend growth probably not so good, like it's declining. So it's pricing that in. So what you would like to do is focus on dividend growth, like what Sir John and Jared mentioned, and stable
Yeah.
also.
That's really a great point, Aaron. So I'll concretize that. So one of the best examples that we like pointing out during our webinars is ICT that owned by Enrique Razon, right? In 2002, ICT was only worth 2.6 pesos per share. And at that point in time, they were giving out dividends of 30 cents per share. So that's over a 10% yield, right? So fast forward 20 years later, ICT actually grew their dividends by over 20+% per year. I think it was around 25% per year per annum. So last year, instead of paying 30 cents, per share, last year actually they paid 9.35 cents per share. So imagine if you had bought 100,000 shares of ICT in 2002 for 260,000 pesos. That year, ICT paid you 30,000 pesos. For that same 100,000 shares, this year, they paid you 935,000 pesos. So that's the difference between a dividend growth stock. And to Aaron's point about dividend growth supporting higher stock prices, that 2.60 pesos is now closer to 400 pesos per share in ICT. So you've had a dramatic increase, over 100x increase in the stock price of ICT, plus the dividend is much dramatically higher than it was in 2002. So that goes to show you the power of long-term dividend investing.
Yeah.
Yeah.
I think ICT is, it's an underrated stock. It's not something you hear from traders every day, but if you see on the chart, it keeps what do you call this? Um Parang pataas siya lagi if you see the chart, but it's not something you hear from every investor or trader every day. And regarding sa MP2, I think REITs are more liquid, right? It's like stock where you can sell it anytime, but for MP2 kasi you are locked in for 5 years and you can only withdraw it if there are conditions. So I think if liquidity, you go on on REITs. So yeah. So yun lang yung question that I got from my community.
Thanks for that.
Yeah.
Actually, Bear, it's really a great point. When you're investing, you don't have to exclusively invest in one asset class. MP2 is a great investment, and you can diversify across different asset classes. The important thing is to really invest, because especially as a young person, you have the advantage of time on your side to weather different economic cycles and really be able to take advantage of the compounding effects of these asset classes.
Yes.
All right. Maybe we
Okay.
can go to our next question. Next slide, please.
Okay, sige. Let me read na lang siguro. Do REITs also have charts like stock and crypto trading view?
Yes, actually they do. So REITs have charts and they're tradable. Pero they're nothing like crypto, obviously. Pero yes, they have charts and they're available in TradingView.
Yeah, and we also have TradingView in our Dragonfly platform, right? So it's especially better in the web version, right? So in the mobile app, it might be a bit harder to chart, but
Yeah.
in the web platform, yeah, we have, I think, the best TradingView among all the brokers.
Yes, because what we noticed kasi is that people are accustomed to the features and the charting of TradingView already. So that's what we hear from
Yeah.
our friends. And what we did was that we heard it and incorporated it into our platform also. So next slide, please.
Next question is, can you share which REITs give out 100% dividends?
Okay, so by the REIT law, REITs are required to give at least 90% of their distributable income. But yeah, there are some REITs that are very, very generous. So one of them is C-REIT, like my example a while ago. So if you check their adjusted funds from operations, or AFFO, that's exactly the same amount of their dividends because all their cash income, so disregarding mga depreciation, the straight line rent adjustment, and the increase in property value, right? All of its income is really going to dividends. So it's really rewarding its shareholders. Then if you check A-REIT is actually not 100%. I think if you check their distributable income as a percentage, no, dividends as a percentage of distributable income, it's at 90%. So which is also okay because if you don't give out 100%, that means you have 10%, which will go to cash, and if ever in the future you can use that cash to make cash acquisitions of properties, right? So it's not really bad if a REIT does not max out the 100%, right?
Yeah.
Because this sometimes the REITs need some cash inventory, right? So that they can do cash acquisitions and not just rely on property for share swaps. So there.
Exactly, Jared. So actually, you guys shouldn't, or the goal isn't to be looking for the company or the REIT that pays out 100% of its dividends, because that means na they have zero cash to expand and grow their business. So for example, if there's like a REIT, it has 10% that goes to cash that can be used to grow and expand its business. So maybe sometimes actually it's much more important na it doesn't max out or 100% na dividend share. So next slide, please.
Okay, for 2025, which REITs do you think are most likely to be consistent in terms of dividend yield? What would you recommend investing in?
Okay, so we'll stick to our top three. So it's basically A-REIT, RCR, and C-REIT because those are already time tested and their dividend yields have been increasing, not just stable, but increasing. But yeah, so those are the three. Then if I were to expand that coverage, maybe I would look into M-REIT if they're able to infuse their mall assets because right now I think their dividend per share is now at a new high and it's still at office. So imagine if they're able to infuse their malls, diba? Then that should make the dividend growth better, right? So those. Then other than that, maybe I'm looking at PhilREIT. So PhilREIT is a bit troubled because di ba mababa yung occupancy rate nila. But I think they're having like a tender offer with the FLI shares. So they said that with the proceeds from that, they'll be able to infuse some assets. So for me, that's a wait and see. I guess you can monitor PhilREIT if after that that tender offer for the not tender offer, like basically they're offering with the FLI shares, right? If they're able to convert that to better performance, then I would maybe look at the PhilREIT because the dividend yield is very high already, and if they're able to improve their occupancy rate and their operations, then yeah, that could be the turnaround REIT. But for now, not yet. So the top three, A-REIT, C-REIT, RCR, then I would watch M-REIT the most. So there.
Okay, as for me naman, what I would like to add to what Jared said is that I also share the same sentiment that I like his top three picks. And personally, I own one, so I own A-REIT. But I bought A-REIT at lower prices. And what I would like to say is that it's important to buy REITs at the right prices. So for example, A-REIT has the best property assets, or A-REIT has the best in terms of fundamentals. Pero if once it reaches prices are super high, then maybe you shouldn't be chasing that as well kasi sobrang liit na ng yield mo. So next slide, please.
Okay, are current occupancy rates published?
So yes. So actually, REITs are required to publish what you call a fund manager's report every quarter. So I think just a few weeks ago, all the REITs published their latest fund manager's report for the third quarter of this year. So there in that fund manager's report, you can see the occupancy rates for all the properties broken down. So example, a REIT has 24 properties. It shows the occupancy rates of all 24 properties. Then of course they're blended, right? So blended meaning the overall occupancy rate of all the properties. Then they also have the breakdown of each property. So yes, it's actually there.
Yes. So if you are masipag enough to look all through the GLA, through the occupancy rates, yes, you
Yeah.
can see it actually online. They publish it kasi they're a public company.
By the way, guys, this was fun. I need to drop off. I have a dinner meeting. Looking forward to seeing you guys in future webinars.
Thanks so much,
Thank
Sir
you so
John.
much.
Thank
Thank
you.
you.
Thanks, Sir John.
Sure.
All right. So let's proceed. Next slide. By the way, we guys are lucky to have Sir John with us today, diba? Kasi you get to have his insights also.
Okay. Is a REIT, in your opinion, overpriced now, or does it still have room to price up?
I think if you check the Bloomberg estimates, REIT is more or less fairly priced right now. So it's very near the consensus right now. So yeah, but does it still have room to go up? I believe so, because their recent property acquisition, they included their Palawig lot, so that's the industrial lot. So I think that's really gonna drive their rental income in the future. And also Glorieta 4 and 5 ata. So that's there. And of course the rent escalation, their organic growth, right? So that will still drive them. So how I think of it is, it's just because it's overpriced doesn't mean na babagsak yung presyo. It just means na you have to wait for it to dip and buy it at a reasonable price that has a reasonable discount from the fair value, right? So because an example is ICT, right? It was always fairly priced, but over the past year, right, you saw na it was 200, then now it's at like near 400 pesos now, right? And it was always fairly priced the whole time. So there you can really see that it's really fundamentals first, right? So it means the market gives it a premium. That's why it's fairly priced. So yeah, it still has room to go up. I believe that if the REIT keeps performing well, parang in the next quarters, analyst estimates, they'll just keep being revised upwards. So for me, I think REIT is still a buy the dips play.
Yes, I agree with you, Jared, especially with what you said na if a company is really doing well, if a company is
Yeah, my premium eh.
yeah, if it's one of the best companies out there, there's going to be a premium for it. Expect na participants are chasing to buy that asset or to buy that stock. So fairly priced talaga siya. And what I would like to add also is that, remember guys, kanina I showed sa mobile demo that we have a calculator. So for example, if you use that calculator, like for a REIT, especially for this question, for a REIT, assuming the factors that we inputted kanina, our buy below price for a REIT is below 37.5. Ibig sabihin lang na once it reaches below 37.5 pesos, we think na it's reasonable enough, or it's conservative enough rather, to get into a REIT. So it's parang much more attractive when it comes to risk. So next slide, please.
Okay. So we're down to our, I think, last two questions. Okay. Do you recommend PCA for long-term traders, or do you recommend short-term trading?
Okay, so for REITs, we generally don't recommend trading them because really REITs are for the dividend play. So you buy a REIT so that you can hold it for the long term and collect the dividends, right? So, but of course, the REITs, if they perform well, right, they'll go up in value. But REITs generally parang staircase up yan eh. Hindi siya parang growth stock na you can expect parang double your money from price appreciation, di ba? Hindi siya ganun. So it's a staircase up. So medyo mabagal siya, but of course, um you're expected to earn more from the dividends, right? So peso cost averaging, I believe it has its limits. So di naman pwede peso cost averaging at any price, di ba? So kahit nasa peak, you're gonna peso cost average, di ba? Parang, for me, that's not the right way to play it. So I think you have to mix your peso cost averaging with your buy below levels, right? So like what Aaron said, di ba, may calculator kami to help you compute what's your buy below price based on the Gordon growth model. Or you can also mix technical analysis into it, di ba? Kapag oversold yung stochastics, tapos nasa support level, then there you can start allocating. But peso cost averaging at any price level, for me, that's the wrong way to do it. So you can peso cost averaging, but I wouldn't call it peso cost averaging. I would call it strategically buying the dips at the reasonable levels para your average price in the REIT, di ba? Very reasonable. So there. How about you, Aaron?
Ako guys, sinasabi ko sa inyo, I'm telling you guys, I want to give you guys an advice. Wag na kayo don't try to bother trading REITs kasi if you want to retain your sanity, don't bother trying to trade REITs. Kasi I'm not saying that it's impossible to trade REITs. What I'm saying, it's very difficult, very time consuming. No, not very time consuming, pero very difficult to trade REITs. Tapos, masisiraan pa kayo ng ulo because mabagal kasi yung galaw ng REITs. So it's
Yeah.
hard to make money off them. And then, it doesn't move as the same behavior with like different types of stocks when it comes to trading also. Kasi trading kasi you try to apply it into, for me, in my opinion, into place stocks or not into place or stocks that have narrative in them. Parang stories, kumbaga. Kasi when people think that there's a story to a stock, prices could move much, much higher. So, mas mataas yung scale ng movement. So, mas sulit i-trade sila. So, next slide, please.
Okay, I think this is the last question. To avail the Prime account, already applied the referral code of Lemoneyd. Okay lang ba na mag-deposit lang for now para ma-upgrade yung account to Prime or kailangan mag-invest din? Planning to deposit muna. Okay, so since this is our promo, let me answer this. For you to be upgraded or for your account to be upgraded to Prime, you really need to invest then, not just deposit. Para ma-trigger yung Prime upgrade, you need to invest at least 5,000 pesos.
Yes, because syempre, we want to help you guys also, right? Parang we want to motivate everyone to not only deposit, pero syempre, you invest your money and you do it baby steps, right? So, don't invest super a lot of money right away. Try to do it in a step-by-step manner.
Yeah, I think these REITs are very good place to start kasi the price action of these REITs these are not volatile stock type of stocks right? Hindi sila yung magda-down ng 5% or 10% in a trading day. So hindi sila volatile. So it's a good place to start to buy REITs.
Yes, I agree with you, Sir Rain, 100%. So I think this is our last question. So what, Sir Rain, actually, I would like to invite you. Know, I'm very thankful for you and inviting your community partnering with us today. I would like to invite you to give your closing remarks.
Yeah. Again, I thank Dragonfly for conducting webinars with our community. Kasi wala kaming before we don't have a partner so as you know, our community kasi focus on digital banks, but you know, digital banks are not what do you call this? Like the high interest rates of digital banks are not sustainable. Hindi habang buhay magiging 5% or 6% sila. So if you completed your emergency fund, you need to invest para mas lumago pa yung pera mo. And that's why I reach out to Dragonfly to partner with them so that you know they can help our community to invest in the Philippine stock market. So we already done 2 webinars and I hope we can do more. You can suggest us investing topics that you want us to do webinar with, and Dragonfly and the experts from Dragonfly, including Jared and Aaron, will help us out. So yan lang. Thank you so much, Dragonfly, and also to our Lemonade community.
Thank you so much, Sir Ray. No? So actually, I agree with what you said na sometimes kasi these rates or the interest rates from these digital banks, they run on promotional periods, di ba? So hindi naman parating sobrang taas niya. So at some point in time, parang baka bumaba din sila. And okay, so on top of that, actually, Jared, would you like to add anything or would you like to say something to our audience?
So I guess, yeah, for me, I'm still bullish on REITs now and coming into 2025. So I think talagang by the dips play pa rin ang REITs, and they're still pretty good asset class right now. And if you notice, very stable pa rin siya kahit na the market's going down. So I think that says a lot talaga na Filipinos really are supporting REITs talaga kapag once it's dipping, di ba, talaga may sumasalo. So I think, yeah, plan your trades, I guess. So don't chase the REITs, di ba? Wait for them to hit your buy below price, di ba? So wag mag-chase ng REITs because talaga mabagal yung REITs, di ba? Staircase up yan. So you can be very patient in investing in REITs. So ayun.
Yes. By the way, for our next webinars, like Sir Ray mentioned, no, you guys can suggest like what topics you want para syempre we could accommodate you guys. And for example, lang, you like to learn more about how to trade, you like to learn more about charting, ganyan. You could also suggest that, right? So, Sir Ray, would you like to add anything else before we end this meeting?
Yeah. Well, do you think we can do one more this year or next year na?
Yeah, most likely it's going to be next year, sadly. Siguro let's try to do early January siguro. So pero nothing final, right? So siguro, Sir Rain, let's talk about it. Tapos let's discuss what's gonna happen.
Okay. Yeah. Sure. Yeah, thank you.
All right. So thank you so much everyone for tuning with us today. I hope you guys had a great time. You enjoyed, you learned a lot, and you had fun. So that's the most important one. So bye guys, and see you on our next
Bye-bye.
webinar.
Bye.